Hey traders, what's going on? Jamie Saettele here. It is, sorry, get my mic fixed here. It is April 18th, 2018. And this is the midweek strategy webinar with me, Jamie Saettele. So, Jaya, how are you? Let me know that you can hear me and that you can see. AV is good, says Pooja. How are you, Pooja? So, I don't have a whole lot new to add with respect to a lot of the majors, obviously, that we've been looking at here, because, well, as you well know, volatility is kind of non-existent in the currency world at the moment, but that always changes, right? Quite an opposite feeling from, say, back in February, right? And even in March, early March, we had these big moves, and now we're getting towards the end of consolidation. No change to, the idea that this is a triangle. We're going to look more, we're going to do a little more on say indices today. Last night in the post, I included indices in the DAX, looking at the S&P, we're looking at the Nikkei, so we'll do a little bit more there. Here's the S&P. Here's the hourly. We did not quite get that median line. We could still get it later on. You could come up 2720 or so is the 75 line. So this is the fork that I'm following, or the channel that I'm following, and it's really quite well defined. Remember symmetry, concept of symmetry, and we had solid support more or less on and around and just below the 25 line. So the 75 line, which is 2720, would be an area where we may very well get a pullback. As far as trading it's concerned, I'm not sure that there's really a trade for me to, so-called fight this move, if you will, really until probably up here, which is the 2744 area. And again, that's huge. 618 of the move down from January. It's also, again, it's kind of a whole lot of slope stuff going on there. So we will look at the indices here in a little bit. Yeah, Mahai, Mahai says, I still believe they have to run the stop losses under 27 before going 2740. You may be right. If this is just such a strong, consistent move higher, that I guess for me, yeah, like if you got down here, right, that would be a great place to, to get along for a quick trade up. So yeah, getting that median line here, 2696 would be ideal. Yeah, Mahai would not short. Definitely, I'd buy 26. Yeah, I was sitting here licking my chops this morning when we were coming down. I tweeted out 2696. Sitting there looking at 2696 short-dated calls, take it up to 2740, and just, they stop it just short. So anyway, we'll go back to the indices here in a bit. I know Mahai is very excited about that. About the fact that we're concentrating on some indices here. But yeah, let's get into, hold on, let's get into, excuse me. All right, so Euro. So we are looking at the triangle, right? And it is kind of picture perfect with the triangle scenario. So remember all the 618s that we've got going on here, the alternating legs. So wave C is 618 of A. Even wave D at this point is 618 of B to the tick. Okay. So if we have if this little high yesterday, if that was a top for wave D, right, A, B, C, D, then we should be looking at a possible move down to 2250 before we break up and out of this thing, and the dollar gets smashed one last time. Remember, 2279 is daily reversal support. It's just a low day close from back here on April 6th. That was NFP day. But 2253 might be the better option if we can start to roll over, right, and get that E wave. So the slope that we're looking at here, we are just going back to and keeping it just on the original slope. So that means from the January low to the April low of 2017. So that's all we're following at this point. Okay, and you can see that the parallels within it, trading up on resistance here, and I'd be looking for it to provide support down at 2250 over the next couple of days as we complete this triangle. Okay. Now look, let's say that if we were to break up and out of here now, and we were to break up through this trend line, like I want a contingency plan in order to, get long, if you will, euro. And if we were to break up out of here, you would be looking for it to provide support, right? Because again, it has been resistance really throughout much of the month here, right? April, we're a couple weeks in. So it's been resistance, and it has been really big support before. I mean, you've got, look at there, here, right? So, and this was actually the CPI level back, I think the CPI, no, that was the CPI print, sorry, in February. But yeah, we have the defined levels, the well-defined levels. We know exactly where to look and what to look for, I believe, for euro. And I know it's tempting to like kind of want to try to short it here and take it down to 2250 or even 2280 or whatever. It seems like such a fight. I mean, trading anything right now, FX wise, just seems like such a struggle to get moving anywhere, right? And you have all the momentum's higher, so I'm not too keen on that idea at this point. On trying to short it here. I mean, the stop would be extremely tight, but again, I just don't think it's worth it right here. So, all right, let's move on. Pound, interesting. Started to see a lot of bullish commentary on the British pound the last couple of days, and we have gotten reversal finally. So we've come off and we've actually retraced the last 1, 2, 3 days. Support that we'd be looking at again is going to be the median line, the center line right here, right? We came into the week Sunday's update. I noted just two levels, right? Two levels that we wanted to pay attention to, and that was the high up here at 43.44. We took it out, reversed, and then I guess last night's was the inflation print, I believe, has sent pound tumbling a bit, but big support down here at 41.45. So if we can get, kind of makes sense if you think about it with euro, I guess, if you can get perhaps a little more weakness down here and get 41.45, maybe that's the same time that you get the E wave pullback or the final, the final leg of the triangle in euro. Okay. As far as shorting British pound for that move down, What was yesterday's close? It's right here. Yesterday's close is 42.90, which is also very close to the 618 of this drop so far. So if you got back up to 42.90, 42.98, which is the 618, be interested in a short to take it down to the median line and then move higher from there. So pound taking shape as well. Let's not forget with the seasonals, folks. I'm gonna bring in the seasonals here. I think this is important. We are coming into, so the end of this month, okay? Here's Euro, for example. We actually are coming into the point in early May when you do see a fairly important seasonal shift, and that is you get, you know, the Euro turning down. So that's in 2 more weeks. Now, let's think about this. Look, we don't have to fit everything together. I get it. Like, you don't have to say, well, the seasonals are going to turn down in May, and Jamie's talking about a bullish triangle in Euro. So, like, you know, what gives here? Well, it's actually pretty conceivable to me that you could finish this E wave over the next day or so in Euro, and then for the next 2 weeks just go screaming higher like crazy, and then actually into a top. I actually think it fits pretty well. You know, British pound as well, same date really, you know, that May 4th, early May, for a potential topping out point. Aussie dollar, similar. Kiwi actually over the last, there's some seasonals kind of over the last 10 years in which we've actually turned down now. We're short, but it's not really going anywhere. But other than that, yeah, you go back out to the May 4th date. Canadian dollar, same deal, right? Lower into that May 4th date before you would expect relief from a seasonal basis. Even dollar yen, right? A little more mixed on dollar yen. You've actually had, over the last 5 years, you've had a bullish tendency. It's actually been the exact opposite as the long-term tendency. So not a whole lot of confidence in the seasonals with dollar yen, but I wanted to bring that to your attention, and I think it's worth noting. Okay, let's actually look at the dollar Swiss exchange rate. So dollar Swiss is trading up around its 200-day, right? Right here. I think this is one to watch. I know the 200 days right here. More important level to me is probably the yearly opening price. All right, and if I go to a 4-hour chart, I've got a fork drawn on here, and hold on, let's fill this in. I've got a fork drawn on here. This is a Schiff fork, and you can see that kind of over the next couple of days, you'd get up into that 97.42 region, which is also the top of this parallel. So for support here, I'd look at really, you know, kind of where you just came from, but 96.44 is the square root level, former high, parallel within the fork. A little more strength into 97.40 for dollar Swiss. Again, that could end up, you know, helping to or occurring at the same time as maybe when you complete the E wave in the triangle in Euro. We'll look at the commodity currencies here, and then dollar yen, and then I want to go over indices and some commodities, and then really, I maybe just take some questions on other maybe crosses that you guys would like to look at, because Frankly, I don't have a ton of stuff to go over that we haven't already gone over. All right, so here is Kiwi. Still looking a little bit lower, right, into this lower parallel trend line down here, which is going to be in the 72.80s. You know, the longer this trade takes, the more we probably have to move up the stop, because it's an upward sloping trend line. It's going to increase each day, but hey, at least the market just now did find resistance again, more or less on the median line here. This is an hourly chart we're looking at. You are under the 200-hour average. 4-hour chart is actually kind of where we're targeting, is the average down here, and that might be a buy in Kiwi. Is there anything coming up in Kiwi land for, actually, yes, today we've got, okay, we got Kiwi CPI today, Aussie employment. So we might actually get some sort of a move in the New Zealand dollar. So yeah, no change here. Again, looking down into the 72.80, 72, you know, call it 72.85 or something area for the New Zealand dollar. And at that point, I'd actually be interested in potentially buying it, right? I do think that we are in an uptrend with Kiwi, but it was a good spot to short up here. All right, that's Kiwi. Okay, Aussie. What gives with Aussie? I don't know. Look at the screens right here. Look at copper. Copper's up 2.4% today. Silver is obviously on fire. The Australian dollar just does not care. It reminds me back in late last year when we had, you know, you had that hell of a huge run in the copper price, right? And Aussie had a run up until September, until FOMC, and then it just did nothing, you know, languished and pulled back and kind of really was underperforming until we had that pullback in Chinese equities, right? And then we were able to turn bullish on Chinese equities and bullish on the Australian dollar. And then it turned up, and then the Aussie had another good run. Well, now it's back to what we were doing back here, which is Aussie's really doing nothing while you're seeing, you know, copper turn up like it has. I still think, just from a pattern perspective, that this is a possibility. Again, the ending diagonal possibility, getting A, B, and then 1, 2, 3. This is a 4, lower in 5. That Aussie Kiwi chart that I put up the other day, however, is really quite bullish. And, you know, it doesn't have to play out right away, of course, but I think it keeps me from really wanting to necessarily short the Australian dollar. You know, up here, that's, you know, that's really it. I mean, I don't have a burning desire to short the Australian dollar during a seasonally strong period, and during a period in which you know, the Aussie Kiwi cross has turned up from major support. Okay, so it's wait and see. Maybe tonight with the hold on here. Maybe tonight with the employment data in Aussie land, maybe we'll get, you know, a high volume level to work with. Actually, just had a high volume level, which is odd in Australian dollar. So either way, no clarity there for me on a trade basis, but should clear up soon enough. We should know whether or not we are in an ending diagonal, or whether whatever this is complete and we're going higher, right? All right, dollar CAD. Levels playing out pretty well. That 26.86 you're not too far from there at this point, right? That's a big level to pay attention to. Let's go to the other chart, the longer term chart. Here it is. Okay. So dollar CAD 1, 2, this potentially 3, right? 1, 2, 3, 4, 5. And then we're getting back to the trend line from 2012. We're getting very close. And this parallel from the short-term fork or short-term channel, I should say, is in line for some resistance up around 26.86. All right. You've got a high up there from 2.9. You got this low here from 4.9. And again, you have the all-important long-term trend line and then the short-term slope. So extremely well-defined spot for Canadian dollar. Watch for a top up here, okay? So I'd look for a top, and then I'd look for basically another drop to make 5 waves down from here. All right, if we blow through this level, then that's obviously not going on. But as long as we're holding it, I'm more than willing to short bounces in dollar CAD. Dollar yen. So I'm, sometimes when the market's like, really quiet, not doing a whole lot, you start to maybe overthink things a little bit. Maybe look at some different slopes or something. Well, I did that last night. I was looking at dollar yen here. So when, the corrective channel and then tag the underside of it, right? And then go lower. That is a setup or a method or a tactic or whatever that we have talked about a lot. So let's consider it here. So drawing this trend line, right? And then making the corrective channel right here. And oh, by the way, the center line from this channel was actually very well-defined resistance right here, right? We nearly tagged that on 413, right? Point being is that we're in the right place for dollar yen to roll over. Does it need to spike out one more time, right, and try to take everyone out that's trying to short it? I don't know, maybe. And also the position of US and indices and the Nikkei make it a little difficult, right? Because we still think that we have a little more upside there. The Nikkei chart last night, I was looking for it to turn down from where it was, and then of course the Japanese market opens and the Nikkei goes through the roof on some sort of talks about, I think, meetings or something with North Korea and the US. I don't know. But either way, the upside there doesn't look finished until we complete that flat, and we'll look at that in just a sec. So point being, I'm fine with, like I said, leaving these orders in. It's a 20 pip stop. It's not a big deal there. Just understand that I think we're in the right spot for us to roll over in dollar yen, even if it's just for a pullback within this range, okay? So let's go to the Nikkei then. Okay, 4-hour chart. Yearly open, by the way, is 22,708. Would obviously be a good spot for the Nikkei to trade into and roll over. Bottom line is we're thinking you take out 22,502, and then that's 226 high, and that completes the flat correction with the 3 waves down into the low, right? Near term, we have this, what is that there, 327. This is a fork, and again, when you're drawing forks, median lines, channels, what have you, the whole idea is to find the angle that the market is trading on, right? And in this case, the angle that it's trading on appears to be this. It's pretty well defined, right? So I am following this for near-term guide, if you will, on the Nikkei at this point. Again, you would look at the median line as potential support. You can see that this parallel is perfect as far as providing support. So to me, it gives validity to the fact that the market is trading on this angle. And then you have subtle little clues, like right here, right? You pull back from that, and then this was last night what I was talking about during the Asian session, where you know Nikkei went skyrocketing, as the Japanese markets opened. So that's the median line acceleration, and we've even consolidated now around the 75 line. Point being, this is your support. Okay, the median line is your support at some point, and that's going to be just above 22,000. So you're currently 22,186. 190 points lower before the Nikkei can go higher. We've kind of already gone over the S&P and the near-term stuff. Again, you're just below 2,700 support, 2,744 resistance, and this is that long-term fork. So shift fork, 2009 low, 2011 high, and in 2011 low, and just follow the parallel. Okay, look at all the times that was resistance. Look at all the times it was support. And then recently, resistance, support. On the last day of the year, we opened the year, and this is where the market really blew out from, right? I mean, really blew out from. So yeah, it's a pretty big spot to go into. I think if we trade up into that level at some point, if it's the later date, then it'll be on a break above this trend line, which everybody will be watching, and everyone will get bullish on the break. Whereas the level that we're really paying attention to, and the more important level, is probably this one, right? It's probably this magenta line in the 27. If it doesn't get there the next couple of days, it's going to be higher. It's going to be like in 2750s. And then, of course, the DAX. You already know what to look for here. Getting pretty close, right? But this is the resistance area, 12,736, 12,811. I feel like we've been talking about getting to that level for a very long time, and now we are in striking distance. So pay close attention over the next couple of days as we get up into this. This is the DAX to me is really one to pay very close attention to. Mahai says, how much higher should it go to believe a new high is possible? Well, I don't have a great answer for that, but my answer would be, let's go back and look at it this way here. If we go back again to this, right, to the long term, look at the way you traded around it. I would say that a daily close above it, right, would change things for me, okay? Mahai's asking about stop losses for up here. Well, give it some room. I mean, 27.60 would seem reasonable. Of course, you don't want to get stopped out on a spike like this. It's also, it depends on the time of day. I mean, you get in there and get into a big gap open scenario, look to fade the gap and then, try to move your stop quickly, right? If it's on a quick news announcement, right, and do a capitulation, if you got to know what sentiment feels like at the time, right? So there's no way for me to say exactly what your stop should be at this point because we're planning a trade and that, is in 30 points anyway, right? The first move, don't forget, is that you're going to be probably looking to buy first to get into that level, right? And that's going to be down here. So okay, so those are the indices. Again, the DAX, huge level just above. We know the levels that we want to trade in the S&P. Mahai says he's prepared for the setup of buying. Well, that's awesome. It's good to hear. Yeah, I mean, it's always good to look ahead, a couple steps ahead, but at the same time, if you look too far ahead, then your execution is going to get messed up. Okay, let's go to some commodities because this is where things are getting more interesting at the moment. All right. Crude oil. I am looking for a high, a top. It could be anywhere. It could be in the low 69s. Excuse me. I am looking for a high near 69. Looks like 69.20, and maybe as high as 70, 35 or so. So here's why. You probably already know why because you've attended webinars with me before. But this is your long-term upper parallel, okay? And it's like literally perfect, nails the highs like to the T back in 2000, back in 2003, and even it was even resistance back here in 2004, and that was actually before you broke out, right? So you could pull off of it and then get a breakout later on. Okay, if we continue to scroll forward here, we can see the resistance in 2015. And you can see that we're getting really close. So yeah, I'd be looking for a top of some magnitude up here. And if we go back to the seasonals, we are actually when we look at crude oil, last year crude did the opposite of its seasonal tendencies. This year it's kind of back on track. We are coming into the seasonal top for crude. It's actually after next week. So, that certainly fits the bill in terms of getting some exhaustion on the upside in crude. So pay attention to crude. Again, those levels for a possible high are going to be 69.20 to 70.40 or so. Really paying attention to the 69.20s. I mean, that's the really long-term spot that's been so big for so long. Okay. Okay, let's look at silver. We've been talking about it for at least a month, but the speculative short position on COT, right? Specs are net short for the first time in a very, very, very long time. And we're finally making a move. Back above the 200-day average is a plus. I think it was last Wednesday? Yes, it was. Last Wednesday was the 11th, right? And that was when we thought we might be trying to break out. And of course it did not. It was a failure. Well, now we are finally breaking out. So here we are. You still have a level. This is a daily reversal resistance right here at 1728. The SLV, which is the ETF, remember this is the level that I've noted as kind of one for a trigger point on the long side. And for me, it is this magenta line. And we are back above it. That's a good sign. And then finally, I think I shared that analog with you last week on silver. And here you go. So this was the analog from silver, 1993 low, right? So if you want to go look at it yourself on the on your workstation, it's simply this. So we matched up, we dragged over basically everything from 91 down into 93, and it matches up pretty darn well, right? So by this measure, what we'd be looking at here is really a rally up through August. Obviously, you're going to have, you're going to have pullbacks within a rally like this. Silver, even rallying up into early May and then pulling back is a possibility. With the initial, kind of excitement maybe happening at some point in June. Again, we don't know if this is going to play out, but man, it seems like it makes a lot of sense, doesn't it? When we talk about the COT position and the coiled nature of the silver market, this could really be something that, this could really get things going, right? And if you're wondering, you're talking here about a potential for, what is that? 7 over 17. So that would be, you're talking about essentially a 40% rally from even where you are right now in silver, which would be, that would be amazing. So silver, this might be the opportunity of the year. I don't say that lightly. I don't say things like that. I don't just make stuff up. There's a lot of evidence behind this idea that makes it, I think, worthwhile. Okay. Let's look at gold as well. I think the spot to be is going to be silver, not gold. Mahai says, will you trade it? Yes, I trade it through options. I trade silver through options, but as we get moving on this, I will certainly, offer insights during the swing setups to levels that would be ideal to trade. Okay. Okay, so here is gold. Again, my concentration is really on that silver market. You don't have the COT position. You don't have that going on in gold. Okay. At the same time, I'll add that a breakout in gold occurs again just over 1375. That is your high from 2016. It's the median line here. Talk about median line acceleration. And if it fails, then you're looking at support down here at 1307 or so. So that's it. And again, let's look at this. Let's look at the silver to gold ratio. Silver to gold ratio, historical, range here. You're towards the bottom of that range, right? So as a spread trade, right, I'd rather be kind of long silver relative to gold. I mean, 2003, 2008, 2016, and now 2018, right? You can look at it as a really big range trade. All this tells you is that silver is historically on the cheaper side relative to gold, which obviously indicates more potential on the upside for silver relative to gold, right? They can both rally, they can even both decline, right? But the point being is that silver is going to outperform gold coming from the bottom of its range, or at least that's the idea. Let's put up silver itself, right? So silver itself, you can see during these periods, here's silver at the bottom of the range, silver at the bottom of the range, bottom of the range, bottom of the range. All right. What about some crosses? Do you guys have questions? I would love to answer questions on, you know, anything you might have. Again, I don't have a ton of stuff to get into right now. I just don't. You know, it's hard to force analysis on a market. It's kind of the worst thing to do. So I don't want to start forcing and making things up. But we can look at some crosses. Again, I think that the Aussie Kiwi cross is an interesting proposition on the upside. Yeah, Chris says Aussie Kiwi looks interesting on the weekly, right? So, I mean, here's that weekly chart. I mean, look at that thing, it's beautiful. So, you know, this is one that you can just be long with a stop under 104, you know, 80. You know, little key reversal last week, turning up. Here's an hour, here, we'll go to a 4-hour chart. Here's a 4-hour chart. You might get some resistance up here. You're coming into the former low, 106.50, 200 period on the 4-hour. So that 106.50 might be something that provides, you know, impetus for a pullback. However, this is a place to be long on weakness, or, you know, even long if you get a move up to here and then pull back to here. So you can see that these parallels, we're following short-term parallels here now. This is the channel all the way back to October 2017. And you can see the resistance levels up here, February, March, okay? And then recently, this parallel, which would be the 75 line from that parallel, was resistance here, 329 and 4.2. So you'd be looking at this to provide support at some point, right? And it looks like you could even potentially draw in a bullish fork here. I haven't done that. Let's see if we get something interesting. And lo and behold, you can. We're actually at the top of it now. So I think that you probably end up breaking through this, but interesting spot, especially with getting you know, the Australian data coming out later. And if you get a pullback there, then you'd be watching for support, probably back on the median line, because that's, again, that's where you came from. But yeah, if anything, I guess the weekly on Aussie Kiwi tells me that you know, I'm on the lookout to be an Aussie bull. We're still below the 200-day and below the year open, and the you know, the diagonal possibility is still very much alive, with the Australian dollar, and I don't want to be buying into resistance. So it's okay if Aussie breaks higher and goes through a resistance level. If the Australian dollar wants to break higher through here, that's fine. And we can, at that point, look at, short term, see if there's a bullish structure that we can latch onto and try to take advantage of it. But for the time being, it's kind of a guessing game here, and I'm not really comfortable just, saying screw it and go long. So we'll wait for clarity. All right, as I'm doing the webinar, you can see we're getting a little bitty bit of, let's see, a little bit of dollar bounce, euros coming off, in line with the triangle interpretation. And Kiwis turn back down, which is nice with the short. So hopefully we can get our target at 72.80. Either, it probably wouldn't be until CPI, but that is the target. My next trade's most likely going to be dollar CAD into 26.86 for the short. What about euro? Euro, say euro Aussie, like euro commodity crosses, right? Let's see if we can look at something there. So log and linear. Linear is actually a bit cleaner. So here's euro Aussie. If you did get a bit of an Aussie pullback, again, maybe it's tonight, maybe it's on the data later, the employment data. Watch for resistance at 160.10. It's the month open, and it's also 75 line of this channel, which of course was resistance back here. Okay, that's back in February. That would be a good spot for euro Aussie to potentially turn down a little bit. Again, just providing some opportunities for levels here to trade into and out of. Not trying to do anything with euro Aussie myself, right? Following the euro dollar triangle, I think that's clean. I think it's legit. I think it's something we should pay attention to. Euro CAD actually turning up off of, this is a very long-term fork. Extremely long-term fork here on EuroCAD, and this could be interesting. You can see that was huge resistance back in June of 2017. Big back. Pull back and more. So big area. So my internet went up for like 2 seconds. You guys hear me right now? Can you guys hear me? My internet went out for a hot minute there. Not very well, not so good. What about now? What about now? Still cracking. Better, better, better. All right, anyway. Okay, all good, we're told. All right. So Euro CAD, this is the 4-hour chart that we're looking at, and this is a shorter term, shorter term fork here. But to me, it looks like you got a 1-2, and this is probably an extended third wave lower. So you could get a rally back up into, you could get back up into 57.90, 58. Let's see where the 38.2 is. It's actually closer to where we are now, 59 or 56.97, and then you get another dip. So this makes some sense to me in the sense that dollar CAD's coming up on a big spot, right? We already know that, 26.86. So you might have a little fourth wave here in Euro CAD, okay? And then get one more low. Eventually, you're going back to kind of trade on this median line again, or just below it, and then you get a bigger rally off of it. So that's my thought process with Euro CAD. It actually jives kind of well when you're thinking about the dynamics between dollar CAD and Euro CAD, right? Or sorry, and Euro dollar, I mean. So yeah, resistance right up here, 56.90, then roll over, and then get a bigger rally. Make 5 down. Let's see what's going on here. We're pulling off a little bit here. Yes, we are a little bit, just a little bit. All right, questions. Markets that you want to look at, anything. Bitcoin, says Mahai. Sure thing, let's look. So Bitcoin. All right, Bitcoin traded up into resistance here. You can see that you do have a bearish channel. And we've talked about this before, I'm pretty certain, but the origin points, again, our angle of influence, if we want to call it that, or our original slope, is just the trend line from August 2015 and April 2016, okay? And that channel, you can see all the great work it did, resistance, support, breakout, support again, right? And then once you went through it, what you do is you add the distance or the width of, between the median line and the upper parallel. You just add that distance, right? 1 times, 2 times, 3 times, 4 times. And you can see just that alone actually provided the angle to trade on. Sometimes, like with precision, right? I mean, look at this here and here, okay? And the top was very near the 4th. Well, now we've traded up into the bottom half of it, excuse me. So this is resistance, okay? We're at resistance. With all of this here, I can't really be much of a Bitcoin bull at this point. 200-day average is up here at 96.45. But right here, big spot. Yeah, so Mahai saying worth a short with the stop loss over the last high. Yeah, exactly. I mean, look at all the times that you've traded off this level, right? Now, spikes and things like that are always going to be difficult to deal with, especially in a market like this. But yeah, I do think it's worth it. And in fact, the supports I would be looking for, well, the first one is going to be just the upper parallel, right? That was support most recently back in September. And that's going to be down, depending on when you get there, it's 6,000-ish. But the major support, I think, is probably the blue line, because look at that. Look at the precision with which it was resistance in 2017, and then support back in July of last year. Okay, and that's obviously going to be a lot lower. That's like 4,200. If you got there, I'd be a buyer, right? And Pooja asking about dollar INR. So let's look at the Indian rupee. Dollar starting to break higher against the rupee here. Funny. So I know we've looked at this before, Pooja, and it was some time ago, but we still have this drawn on here, and it would appear that essentially the same levels look to be in play, because the last time we drew this, they're still here. So this is your channel. This is back to 2008, right? 2008 low. And the 75 line here is just huge. It's been resistance before. It's been major support, and you've been kind of riding along it as well, throughout 2017, turned down. So I would look, what's this big gap right here from March 6 of last year? And that would be 66.50. That looks like kind of your magnet to me on this chart. What is this? A 1, 2, 3, could be a big 4, right? And then a 5 down. I mean, looking for resistance here to potentially take dollar rupee lower. It's interesting. It's an interesting chart, to be sure. But yeah, pay close attention to 66.50. Okay, I would be looking at a short there, just without any knowledge really, or ever trading this. Just based on the chart, based on the levels, that's a level where if you're going lower from there. Okay. All right. Anything else? Going once, going twice. Yeah, Pooja says it's possible the RBI is notorious for its interventions. Yeah, well, might be the spot right there for them to do it, right? All right, thank you, everyone. Pooja, thank you. Jeha, thank you. And wishing you all the best too, Mahai. Everyone have a great rest of their week. And as always, thank you for attending. All right, I'll get this archived ASAP. All right, talk to you later. Bye.